Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Wednesday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and what we saw yesterday was another attempt by the bulls to get over this red line, the 50-day exponential moving average. I keep mentioning it, and I won't shut up about it because it's important, and it's important again this morning. The bulls tried to run the same playbook as Monday morning right off of the open. They made the opening print from the regular session. They made that support and they ran it up and they ran it over the 50-day, but they couldn't hold it. Okay, and the bulls have had trouble for the last 6 months or so holding key areas at key times. It's kind of the same stuff that you would see from the bears back in 2013, 2014, although not on as severe or consistent a scale. So we slipped back down. We traded as low as 60 in the overnight, and back come the bulls. Whether this is another pop to be sold remains to be seen. What we're seeing, though, on the shorter time frames is a move to 85.5. We come back down, and we've tested this area. This was yesterday's opening print, which was key. It chopped around here before launching off of the Europe Open. If this stays as an established high or low, although it's iffy because we only did 83.25, this is right now a lower high. So for all intents and purposes, the bears can knock this down. Okay. As for us, we're long 77.5 from this move. We took some profits up here. We've got our risk out. So if we go down and get stopped out, fine. If it keeps going higher, fine. We're taken care of either way. What I'll be interested to see in the regular open is whether the 50-day and the opening print, and they may be pretty close to one and the same, act as support or resistance. That's really going to be a dividing line, at least for me, for the morning session. So that's something to look out for. If we head higher, you've got 89.5 up there, which is R2. Then if things really get going this week, you have to start to look at the FOMC reaction high up in the 2010 to 2011 area. The bears need to keep the 50-day exponential moving average sealed. They need to put some distance between price and that 50-day to the downside. They need to stop establishing every day's daily pivot as support. Support. They need to stop that. They got to break below the 69.75 daily pivot. They need to stay there, and they need to go back to work on 60. So today has the possibility to be a very wide range day, a pretty good trading day. Door number 3, so to speak, is that this is everything. All the fun stuff has happened in the gap, and we're just going to kind of chop around here between, say 75 and 83 for the majority of the regular session. And just kind of do the sausage grinder thing where everybody gets chewed up. So you always have to have that on your radar. And if you're a trader that can't really trade that type of action, you need to step aside, wait for a day that's more suited to your strengths, so to speak. All right, everybody have a good one. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room and join me at 4:30 this afternoon for today's weekly webcast. The link to sign up is inside this post. It's up on the Twitter feed, and it's on the website. So plenty to talk about. We can have an extended discussion. We've been doing these every week, and they've been fantastic. Some great questions in the Q&A. So I look forward to you joining me. And either way, I'll be back tomorrow morning with another webcast. Trade them well.